Who needs the low interest rates? Is it me? Is it you? Yes, we do, because what has happened? Inflation kicked in. What did the Fed do? Fed raised the rates from 0 to 5%, literally in a year, right? So what happens? Well, when they did that, after having 0 interest rates for 10 years, right? Everything we consume and borrow on skyrocketed. 4% mortgages are now at 7.5%. Okay, credit card interest is over 40% now. Well, not that it used to be. When it was 0, it was 25. That's another crime in its own, to be perfectly honest. But then, if you're managing your debt, if you don't borrow on the credit card, yes, you can use credit cards, but then at the end of the month, pay the balance. Don't carry over balances, because the shit you bought for $100, okay, and if you create a balance with that $100, that $100 item that you bought by the end of the year is going to cost you $200, and you already have used it. How much sense does this make? It doesn't make any sense. So if you're going to use credit, and in fact, it will increase your credit, don't carry over balances. You buy the stuff on credit. Actually, credit is a wonderful thing. They're giving you money, free money, literally. You're floating their money for 30 days, okay? You buy the stuff. At the end of the month, you pay your balance. Once you pay your balance, your credit actually will go higher as well, the credit score. So all I'm saying is that use credit. Credit is wonderful, but don't abuse credit. Most people abuse credit like we do with the U.S. government. We're abusing credit, right? Because we're the currency of the planet at the moment for everything, right? Although petrodollars have gone away now, the BRICS are getting away, from U.S. dollar transactions, right? I mean, we can see the writing on the wall. I talked about this in the past. So who needs lower interest rates? We do. We want lower mortgages, so housing activity picks up again. We want lower mortgages, so if we're going to buy a car loans, instead of being at 10%, are going to go back to 6-7%. We need it. I mean, I can see the strain in the economy. I can see the strain in the average American's pocket. But guess what? The entity that needs it the most is actually the U.S. government. Why? Because annualized interest payments on U.S. federal debt just reached, this is just annualized, single year, an all-time high of $1.14 trillion with a T. I think there are 16 zeros in a trillion. I don't know, maybe 12. Whatever. That's not the point. Imagine this. On that $35 trillion debt that we have created, just the interest, because that's an IOU. We have to pay people interest to hold those bonds, to hold those IOUs, right? And they have to get a return. So this is their return. So we're spreading $1.14 trillion around the globe, and many U.S. pension plans and, a lot of individuals, obviously, are collecting that interest. Now, that's a good thing, right? So one good thing about higher interest rates, by the way, has helped is the retired folks, right? They had cash earning 0 for 10 years. Now, at least on a CD, they can get 5%. Now, it's even a 4 or 5%. After the counting inflation into it, they're still, the nominal return is 0 still, but at least they're getting something, right? And so that level of debt, it has created $1.14 trillion in interest payments. Think about this. This is more than double the amount of interest recorded in 2022. Why? Because the rates were 0 or close to 0, right? So see what's happening here, right? The servicing of that 35 trillion is costing double now in just a year and a half, okay? 2 years. Well, if the rates stay this high, that number is going to keep going higher, because the average interest rate now on the 35 trillion debt is only about 3.5%. That's why we're at 1.14 trillion. But what is happening is that the bonds are maturing. The IOUs that we issued in the past are maturing, which probably had lower interest rates, or 1-2%, right? Now we have to put on 4 or 5% on that. Well, guess what? This 1.14 trillion, if the rates stayed at this level by the U.S. government, the federal fund rate and discount rate, and the 10-year, 20-year, 30-year bond rates stay at 4 or 5%, ultimately that's going to catch up. And this 1.14 trillion is going to go to 1.5, 2. That's what's going to happen. So to put this into perspective, all of it, even during the 2008 financial crisis, annual interest costs were only 450 billion. It should be 0. Why do we have to pay interest to anybody, right? Because imagine that. Imagine we take that $1.14 trillion, use it for some good in this country, right? We know what's happening to our homeless situation. We know what's happening to the average American. We could use that $1.14 trillion to do some good. No, what do? We just blow it. We just put it on fire. And to put this into perspective, even during 2008 financial crisis, costs were $450 billion, or 60% lower, because during that time, the Fed had to lower the interest rates to zero to save the banks, to get the economy going again. So from 2008 to the end of the pandemic, about 12 to 14 years, we had ZIRP. ZIRP is zero interest rate policy. That's what we did. As a percentage of GDP, our GDP is about $27 trillion now. As a percentage of GDP, net interest cost this year is on track to exceed the 1980s high of 3.2%. Because this is the only saving grace. What has happened is that with this debt, we have pumped up the economy to the GDP level of 27 trillion. So that's why a lot of people are going like, yeah, it's not a big deal. It's only 3.2% of, the GDP. But then I go slap them in the head and I go, pay attention. That is just the interest. Okay. So our GDP, well, it's simple numbers. Our GDP is 27 trillion. What is our debt today? 35 trillion. That's 120% plus of GDP is our debt. How can you run your house like this? US, Congress, what's happening? 120%. That's the highest debt we ever had. Imagine now if GDP slows down, right? If the consumer not stops, but slows down their discretionary spending, and GDP goes from 27 trillion to 25 trillion to 23 trillion. Still a massive number, don't get me wrong. So GDP is going this way, debt is going this way. You guys get the picture yet? Okay. So by comparison, during World War II, think about this. We're going back there. Net interest expense as a percentage of GDP was much lower than 1.8%. So now the net interest only is at 3.2%. And look at that chart. Look at that chart on the right-hand side with a big oval I put in for you guys. So bottom line, I agree with this. The U.S. government needs lower interest rates more than anyone. We need lower interest rates, but the U.S. government definitely needs lower interest rates because this is out of control. The IOU payments are out of control. Okay? So look at this, right? Look at this chart. It's the cost of the U.S. debt, cost meaning the interest payments, right? It goes back to 2005, right? Look where we are today. This is up to date from Bloomberg. We're at $1.14 trillion. Look what has happened. You know why that happened? Because interest rates. Fed had to pump up interest rates because they created a man-made inflation problem. Look where we are. Anybody like this? Now, I like trends in stocks. If that was a stock, that would be wonderful. Except that's not a stock. On that one, I would like to have from the upper left-hand corner to the lower right-hand corner kind of a chart, right? And this one, this is gone parabolic now, meaning straight to the skies. And I'm going like, no, this is not manageable. This is ridiculous. But then, I'm just a person. So, but hope you're learning this, and hope you go talk about these in your own communities. This is a national problem. This is not a personal problem. It is a massive personal problem for a lot of us. But if we can manage our budget, we can stay out of trouble. These people in Washington that you guys elect seem like they love spending your money. Okay. And the problem now with all of this is that most of the tax receipts that are going into the treasury are coming from stock sales, right? We know what has happened to that. Well, if the market starts tanking, right, which there is a high likelihood that's going to happen because I think the gig is up, is what, right? So those receipts are going to dry out as well. And economy slows down. Look, I'm not a doom and gloomer, right? I love glass half full. But they are sucking the life out of this economy by doing what they're doing. And I would love for all of you to take snippets of these, segments of these shows, and go talk and have like a fireside chat with your friends and relatives and saying, there is this guy here he's talking to the reality. Maybe we should start listening to it and spread the gospel. Because one day, if I do run for office, this is going to be talked about anyway.